Welcome back to the Money and Wealth Show. I'm Sterling Fox with a special word of thanks to Fritz and the crew at Church Hills here at the Holiday Inn in North Vancouver for opening up this facility for us to shoot this program with our special guest Garth Turner back with us for a third appearance on the program. Garth, round about the middle of September, gold started to break through the ceiling with all-time highs in whoever's currency you'd care to look at. What does this tell you about gold as an investment vehicle, given that just before the break, you mentioned that we ought to be pretty darn cautious and conservative in our investing outlook?
I think there is a strong argument for holding gold. Gold is traditionally an alternative currency. And when people have concerns about the economic future or the value of currencies issued by government, they generally try and find a safe haven, and gold obviously is that. So there's one reason that gold will go up is because of this really confusion we just talked about between inflation and deflation.
Yep.
The second reason is commodity values, and commodities are going to be one of the hot topics going forward. There's a lot of demand building up in India and China. There's a huge population imbalance and economic imbalance. There's tremendous demand in that side of the world. There are commodities on this side of the world. And so when you're going to see increasing demand for gold, base metals, agriculture, potash, timber. All of these things are going to be very good places to have money in the future. So gold is anticipating a surge in commodity values to come. And number three is inflation. If we are going into an inflationary world, gold has proven that it does have some inflation battling qualities to it, that it will retain the value. So I think those are probably the fundamentals behind gold. And there's one more, and that is emotion. Like real estate, gold is a highly emotional asset.
And has been for 5,000 years.
Yes, yeah. So people feel good when they have a hunk of this stuff under their pillow and they can stroke it at night, and it's real wealth. It's like, caressing your bricks. So it is an emotional asset. And right now, because we're still in this, world economic funk, there are a lot of people who just feel better when they can actually possess their money in the form of a rock.
Wanted to ask you something about your personal worldview, because you take a lot of criticism for being a negative sort of fellow. You've been tracking, for example, Canadian real estate for the last year or two and predicting dire things, most of which seem to be coming true, unfortunately, for those of us who are real estate holders. But you are not as negative as your critics would have us believe because, as you've just itemized, you're confident that out of this funk, as you describe it, will emerge a turnaround. Tell us about how you see that happening.
Yeah, absolutely, Sterling. I have no doubt about it. The world fell off the edge of a cliff in late '08. And many people say, well, is there going to be a double dip recession? Are we going back into it? My answer is we never came out of the first dip. I think we went down like that. We've been bouncing around at the bottom. We've had a bunch of people pop up, and finance ministers and real estate spokespeople, and say, oh, it's all over, it's great, but it hasn't been, right? I don't think they've been honest with us. We've been bouncing around at the bottom. We have structural unemployment right now. People lost jobs, they're not going to get them back again. So we're still there, but it'll only last a certain amount of time. When the United States economy hits bottom, when the US housing market hits bottom, when we start to see, some glimmering that the consumer economy is coming back, I think financial markets will have a very explosive upside. Corporations are making more money now than they have for a while. Corporate profits are up about 30% year over year. We have corporations sitting on their cash. They're not spending it. They're not hiring people. So this cash is accumulating. This is all going to be unleashed. A lot of pent-up demand for a number of things. So I think, I don't exactly know when it is. It might be 6 months, 9 months, or a year. But I think we are going to see an explosive upside. And that's going to be good for investors who see it coming.
And I agree with you, by the way. We've identified this on the program many, many times about the billions and billions of dollars that are sitting in the vaults of major corporations the world over. What will be the trigger to the CFOs of these large companies sitting on this huge dollar cash asset to say, okay, time to start spending this money and getting some more value for our shareholders?
It really comes down to one thing, Sterling, and that is risk. Right now, CFOs, CEOs, corporations in general see a murky path ahead. And they don't want to go down the murky path, hiring back the tens of thousands of workers that they laid off 2 years ago, just to have to lay them off again and encounter more costs. So once that murky path becomes clearer and the risk is diminished, then they will unleash these dollars. We'll get there. We are not going to stay in this economic mess forever. And there's a lot of pent-up demand that is actually building. So as I say, I don't exactly know when it's going to be. It might be 2011, 2012. But I do think we are going to see equity markets take off. But I think we're going to see a lot of other assets go down. The real estate market, I continue to be negative about. And I think for the next 4 or 5 years, there is virtually no money to be made for most people in real estate. But there is a significant amount of money to be made in commodities and equities.
Why are you so confident in a negative sort of way about the lack of ability to realize returns in real estate? Is it because of the example of the next door neighbors in the United States?
That's partly the reason, and there's a drag down, but more fundamentally, we let the pendulum swing way over into the overvalued category, and there is no value. You can't make money buying an asset at the top of its price cycle. You can't do it. You have to buy it in the middle or the lower part of the price pendulum, and we're not going to be there yet for a while. Real estate's like a super tanker. It takes years to get it moving up.
Right.
It's going to take years for it to deflate enough where it's back to the trend line. And it's just, that's the cycle we're in. So the money in real estate has been made. Forget it. You know, your parents benefited. Hate them if you want, but tough. You're not going to repeat it.
Time to get on with it and look at a whole lot of other strategies. And that's exactly what we're going to take a look at when we return after this time out here on the Money and Wealth Show.
Good afternoon. My name is Larry Ray. I'm the President and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.